I am Robert Freeman. I am the training specialist here on the NatGen team, actually working right now specifically with our Medicare training. During the last few weeks, what we've been really doing is kind of doing a lot of prep work with the AEP rolling up around the corner here, just basically now about 3 months or about 3 weeks away. So, I've been having real enjoyable time and a lot of fun doing these Wednesday webinars for everybody. I do them for multiple different groups, and our AHCP and our covered groups are one of those that I do as well too. And I want to thank a lot of the AHCP reps for the amazing feedback that they gave, and some additional information as well. So, I really appreciate everybody keeping their eyes open and sticking with us, and if you have any questions, or if you have any sort of comments during the middle of the Motivation Monday today, definitely feel free to reach out and utilize the question box or the chat box, or if you run into any sort of, technical problems, let me know that as well too. I do monitor those throughout the entire broadcast, but just so that everybody knows, I do have everybody muted, so I wouldn't be able to hear you necessarily per se. But in that aspect, if you do have any issues, definitely feel free to reach out to our questions area or anything else of that aspect as well. So, on the topic of Medicare, today's quote I actually felt was really very pertinent in the same aspect. And the main reason that I wanted to choose this is purely simply because of the fact that, when you work with our Medicare demographic, it's really important, and it's really key to ensure that you are making sure that you speak with them in a manner that you are actually providing them with a product that's going to solve their health insurance needs, rather than just simply a product that's, one, obviously we want to make sure it's going to be the cheapest price possible, but two, it's really going to fulfill a need for them in the fact that it's going to solve a problem on their medical side. So it's really I think a pertinent quote to ensure that we look at it in the fact that you're going to be selling a problem that you're solving, and not the product itself. The product itself will sell itself, obviously, once, as long as you show them the value that's in it, what's in it for them, and the fact that it's going to fulfill a need that they have. So with that said, we're going to dive right into today's Motivation Monday. If you're new with us, what we're going to actually do here is we go over about 4 different sections. We're going to quickly go over a tip of the week and look at some of the HCP trends and our sales leaders, and a big round of applause. We do have some amazing, wonderful updated stats, so that's amazing. I've got some updated names for everybody today and some good trend stats to actually look at as well too. And then we'll pop into the sales technique, which is going to be a really quick, brief, high-level overview of Parts C and D. So the previous 2 weeks, what we had done is actually gone over Parts A and B. And the prior week before that, we actually touched on getting prepared and about 8 steps that you can do to prepare yourself to make sure everything's rolling for this year's AEP. So with that said, last week's tip of the week, what we had actually discussed was there is a promotion that was going out called Pack the Points. And what they were actually discussing in that promotion was the fact that you can earn points for specific products that were actually being sold for United Healthcare, and the fact that they have a point structure associated with their Health Protector Guard, their short-term medical products, some of their accident products, and then the Teledoc product as well too. And then of course, based upon those points, you can actually start bundling them and earn a lot more points when you bundle them together. But once you hit a minimum of the 500 points, you were going to definitely then put into the drawing to qualify for a trip to 2. Now, as I mentioned last week, there was an email. I hope that actually went out. I didn't see any follow-up on it from anybody, so hopefully that email did get disseminated, but everybody did want to go ahead and sign up and make sure that they got logged in for that. So today's tip of the week is just one final shameless plug here for our upcoming training schedule, which this week we're actually, for anybody that did miss the last couple weeks, whether they couldn't go online and watch it live, or if they just haven't been available to actually see them uploaded as well either, we're actually going to be doing a review for anybody that's new, and again, anybody that might have missed for Parts A and B. And then the following week, we're going to do C and D again. So one thing to keep note of, though, is that there is a brand new AEP compliance. There's going to be a do's and don'ts and a marketing compliance webinar specifically devoted to that topic. There's been a really high demand for that, and so what we wanted to do is make sure that that information was out there for everybody. So I actually was able to get that in, and you'll be notified here very shortly of the specific day. Most likely it's going to be the week of about 10/10, the week before we run into the AEP rollout there. So keep your eyes peeled. That announcement's to be emailed out soon to everybody. With that said, so we do have some really good trends of everybody today, and actually some really amazing news. We continue to see increases. Obviously, as we're getting into the AEP season here and the open enrollment season, everything is on the increase, which is amazing to see. I love to see the greens every week. So, great job getting out there with the short-term medical. NatGen has been in the lead here now, holding strong for at least a good 8 or 9 weeks. That's amazing numbers that I'm seeing there in the short-term medical side. Our fixed benefit VBA, it's going on 6 weeks in a row now. That is just outstanding. For our accident sales, critical illness, and dental, we actually have some pretty similar stats as the last few weeks prior before we got any stats sent out. But the interesting thing to note here is on the accident side, NatGen, VBA, and Assurant were all within one actual policy. So I believe that it broke down 15, 14, 13. So great job getting out there and pushing those accident products and the supplements there. CBL on our critical illness side and Golden Rule on dental still holding strong on that. So with that said, and without further ado, let's take a look at some of our sales shoutouts for the week. So in the previous weeks, we actually had Dusty, Cody, Elaine, and Richard and Susan. You guys actually, I wanted to actually specifically give you some shoutouts as well today too, before we get into the top 3 here. You guys were actually 4th and 5th spot, but I wanted to say that between you and Susan, you were actually only within about $500 of each other. So well done, Richard and Susan. Amazing work for you two as well. But without further ado, and first we have Katia this week, Jacob, and Elaine. So excellent job, you 3. Again, I would love to give out the statistics for everybody in the group, but I believe that everybody definitely deserves a round of applause on that. The numbers that I'm seeing are just growing steadily and steadily as we push into AEP. So excellent work to everybody on that. On our limited benefit side, we again have Katia, Robert, and Gerald. Gerald's a new one this week. He actually came up from out of nowhere and took over the 3rd spot. Last couple times, Cody, Katia, and Andrew were there. So Andrew kind of got bumped out a little bit, but that's okay. Not a problem whatsoever. You're right in the mix of things as well. So congrats there to Gerald for popping up on the number 3 spot today. And you too, Katia and Robert as well too. Amazing job for everybody. So everybody definitely deserves a round of applause on that. Now, with that said, so what we've actually been looking at over the past couple of weeks was last week we actually did a real quick deep dive. Well, actually not really even a deep dive per se, but a high level overview of parts A and B. If you come with me and join me on each Wednesday, we do an intensive deep dive into each of the individual parts. So some really good material that comes out every week. And and even if you know Medicare a little bit, or maybe this is your first year into the Medicare field, it's really always good to just review the information and just kind of refresh everything in the mind, because not only do some of the numbers with things like deductibles and premiums change from year to year, but CMS is constantly tweaking with the model and things in that nature too. So there's always some good material that can be learned as the years roll out. So like I mentioned earlier, we are going to go ahead and really quickly go over parts C and D that we did last week. And even if you don't really sell Medicare per se, this is really good material to learn, and again, to refresh the information in everybody's brains there in regards to just kind of keeping it at the forefront right now with AEP rolling out in about 3 weeks. So Medicare Part C and D, specifically Part C that we'll jump into first here, Part C relates to the Medicare Advantage plans. So in essence, if you consider Medicare as being 2 different policies, let's think of it that way. One being original Medicare with Parts A and B, and that's what we had discussed the past couple of weeks, those being your hospital coverage for things like inpatient stay, and Part B being your medical for things like your doctor's visits and any sort of outpatient needs like rehab or any sort of therapy that you might need on an outpatient basis. Now, Medicare Part C, though, being an Advantage plan, is its whole animal in and of itself. It really takes combined Medicare Parts A and B, and a lot of times actually also includes Part D, which is a prescription portion, to coincide to one big Advantage plan that we would call Part C. By definition, Part C are Medicare plans and are healthcare plans that are approved by Medicare, but run by private companies. So just like out on the major health market out there for the individual health market or the family health plans, Medicare itself, as far as Advantage plans, are in and of itself strictly just like a regular healthcare plan that's run by those private companies like United, Aetna, and those major players that are out there. Now, the thing to remember on this, though, is that if a client does join a Medicare Advantage plan, they're still going to have original Medicare. Parts A and B are required to be in there as far as the coverage, so that they'll get their Part A and B coverage from the Advantage plan and not original Medicare. Now, moving forward on Part C, though, a lot of times people refer to Advantage plan or just maybe strictly as Part C. It is all encompassing on part of the Medicare program itself. It is available across the entire country. And again, as I stated, it provides Medicare covered benefits, and a lot of the times it does provide Part D prescription drug benefits. So this is one of the major reasons a lot of individuals will actually choose Part C. One, cost, because a lot of the times the Advantage plans will either be no cost or very little cost if their income qualifies them, and we'll jump into that just briefly in a moment. But the fact that the Advantage plans are really all encompassing and they have a lot of extra additional benefits that original Medicare rather, doesn't cover. A nice other portion of this, the fact, if you note down here, is that all the Advantage plans are going to have a maximum out-of-pocket limit. Something that's unique to that versus original Medicare is original Medicare doesn't actually have a max out-of-pocket limit, so you can be paying multiple deductibles and multiple amounts that are in there as far as co-insurance and co-pays on that portion, when the Advantage plans actually do have a cap on those. So again, Part C, the coverage is what you're actually going to get in Part C is going to be your inpatient and outpatient, just like in Part A and B. The Medicare Advantage plans must cover all the services. That's a requirement by CMS. So if an individual's unsure, they're like, well, why would I go for this when I'm already getting the coverage under original Medicare? Well, that information and those coverages are already included. Something unique to the Advantage plans, though, is that the beneficiary must actually live in the plan service area. So you can have the same provider, let's use United Healthcare as an example, in the Texas area and United Healthcare in the Illinois area. They can both cover Medicare Advantage plans, but the coverage in those two specific areas could be completely different as far as co-insurance or deductibles or even cost is concerned. So it is required that if they are going to sign up for an Advantage plan, that they do live in that coverage area. Again, though, that's actually something, if you remember to the Parts A and B, and as far as the enrollments are concerned, one of the things that triggers an enrollment as far as a special election period, if they're outside of the normal AEP or their initial period when they turn 65, one of those triggers is if they move out of the plan's service area. So that's actually something that's really important to remember on that. And then Medicare Part C does have a premium. Sometimes they will get the premium either at zero or there could be a lower cost depending upon their income. But something that's nice about Part C is it really kind of takes everything and puts it into one plan, and it kind of covers the cost as far as deductibles and co-pays. A lot of the drugs, as I mentioned, are going to be covered under that, so that's a really good positive benefit inside of the Advantage plans. And then a lot of their preventative services and even sometimes dental and vision are going to be covered under some of the Medicare Advantage plans. Now, alternatively, things that original Medicare doesn't cover, things like long-term care, again, dental care, wouldn't generally be covered under Parts A and B, unless, of course, it's on an emergency basis. And that's, if they're going to be in some sort of a critical accident and they're in the hospital coverage, their Part A would cover any sort of dental with that. And likewise with Part B, if it's on an outpatient but emergency dental basis. But for the majority of the time, original Medicare doesn't cover the dental care, eye exams, dentures, additional things like the cosmetic surgery, acupuncture, even routine foot care isn't covered under that. So there's really a lot of advantages for choosing a Medicare Advantage plan versus being covered under original Medicare. Now, as far as the premium is concerned, the premiums can vary. Now, you're still going to end up paying your Part B premium to Medicare, and generally 99% of the time, they're going to have that amount automatically deducted out of like their Social Security or their railroad benefit checks. So those amounts are actually going to be not anything that they need to worry about, but it is going to be something they still continue to pay. And of course, there will be a Part A premium if they have one. And if you remember from Parts A and B, I generally don't like to say that Part A is free. There's a lot of verbiage out there like freemium or free premium, but really most of the time, the majority, there is no premium. But if there's an income issue or things of that nature, there could be a premium on that level. Now, likewise, as far as Medicare Advantage plans, there are deductibles. Some plans may charge a deductible, but some may not. And again, this really all depends upon the area that you're actually going to be servicing, where the beneficiary is located at. Now, the nice thing about this, though, is that obviously there's deductibles in Parts A and B. Those are not going to apply when you're on the Advantage plan. So only the Advantage plan deductibles are going to be something that they pay. They wouldn't require them to pay multiple deductibles. Even though they get the coverage of Parts A and B, they don't have those deductibles. They won't apply if they were to choose an Advantage plan. Likewise with copayments, for most medical services like doctor visits, just like the individual health plans out on the market today, or even the family plans, for most of the medical services, there's going to be a copay that they pay up front for any of the services and the benefits that they're going to be used within the plan service area. And also likewise on coinsurance, for select things like durable medical equipment, or if they need something that's going to be prescribed by the doctor at that point for in-home usage, like cane or crutches, there is the possibility of a coinsurance on there. But again, each of those Advantage plans are actually going to set those coinsurance terms and percentages. Now, as far as the plans are concerned, Medicare Part C, or rather the Medicare Advantage plans, there's really 5 major type of plans that are out there in the market today. Now, out of those 5 plans, if you're going to be selling Medicare starting this AEP and then for the remainder of the year also during anybody's initial enrollment period, or as I mentioned before, like a special enrollment period, the top 3 that you're really going to be looking at, first of all, is going to be one, everybody more than likely knows the terminology on this, right, as far as an HMO is concerned. So I think of HMO and I immediately think Kaiser, especially being out here in Oregon. Kaiser's very big in Oregon. Actually just about a half a mile away from us, there's a brand new Kaiser hospital. It's, a state-of-the-art medical facility. And, as far as Kaiser is concerned, HMO plans they're actually very convenient to use. The only, I would say, if you want to use the terminology of a downside, would be the fact that the members are required to get the healthcare for the providers in that specific network. So they normally and generally cannot go outside of that specific plan's HMO network. So they have to use doctors in the network or hospitals or clinics within the network to ensure that they're covered under that HMO plan. Now, there are some HMO plans out there, again, specifically to those areas that offer something called a POS, or a point of service option. Now, this kind of puts the plan into the next category, which would be the PPO category we're going to talk about in a moment. But the POS portion inside of the HMO plans do allow a member to go see a specific doctor or a hospital that are outside of the coverage area. But the downside is that it'll generally going to cost them a little bit more. And then the other thing that's, as far as the HMO, that's really a sticking point on that, is that referrals are going to be needed. So if you go in to see your doctor in network and the doctor says, hey, I need to refer you to a specialist to go see an orthopedic specialist, that's going to be something that they're going to generally need to write a referral for, so that they can then go to see that next doctor. Now, on the flip side of the coin, though, the other opportunity or the other option on that is to get a PPO plan. Very similar to the HMO plan, but really in plans like this, it kind of opens up the network. So I kind of think of Aetna in this. Aetna has a really big open PPO network that's nationwide, and the fact that members can really kind of see any doctor or provider that, as long as they accept Medicare, they can go see that doctor or provider, and they generally won't need a referral. So that's the nice thing about that. PPO plans usually can cost a little bit more than the HMO plans, but again, that really all varies upon the specific location. And then just like on an HMO plan, if you go to a provider that isn't part of the network or part of that plan, it's usually going to cost them a little bit more. Now, that third most common plan would be an SNP, or a special needs plan. These aren't as common, but it is one of the top 3 as far as the most common out of the 5 that are out there. these types of plans, they're going to limit most of the memberships to individuals that are in like a long-term care facility, for example, like a nursing home. So if an individual's in a long-term care facility and, you know, they're going to have specific medical coverage needs that are going to be what would be considered a special need, that's when this SNP plan would really be beneficial for them, as long as generally they're going to be eligible for both Medicare and Medicaid, or if they have a chronic or a disabling condition. There are plans available in this throughout the United States and the nationwide, but they are in limited areas. So you really want to be cognizant of that when you're looking at the plans areas, and if that is something that your enrollee is going to need. Now, real quickly, a couple of the more less common ones. There's as far as the acronym is the PFFSP. I dare you to say it 3 times really quickly, but the PFFSP is the private fee-for-service plans. Now, normally these plans are going to be generally for higher tiered cost plans, usually for individuals in more upper income brackets, but that's not to say that they aren't cost effective for other individuals as well too. But the nice thing about this is that members can really go to any provider that accept that plan's terms, and they're going to possibly get extra benefits just like Medicare Advantage covers. But these are really specialized plans, and that private company that's doing that private plan is going to be deciding how much it's going to pay and how much members are going to pay for service. So it's a little bit one of the more less common plans, but those are out there. You know, likewise, as well as the medical savings accounts plans. Now, if you were with me last week, you might remember that, you know, these medical savings account plans, just similar to the individual health plan market that are out there as far as the health savings accounts plans, these are becoming more and more popular as the years go on. However, still at this point, as far as Medicare is concerned, they are a little bit more less common. But just like on the private market, as far as individual health care is concerned, this is very similar in the fact that it has 2 parts. One, it's going to have an Advantage plan with generally a pretty high deductible, and then the other part's going to be a medical savings account into which Medicare deposits money that they can use to pay those costs. So just like an individual applying money into their health savings account that they can use towards health costs on the individual market, this is very similar to that on the Medicare market. Really quickly before we move on to Part D here and really looking at the eligibility for Part C as well too, a real quick graph here as far as some of the, you know, the verses of original Medicare versus Medicare Advantage. These are the main points that you really want to be looking at when you're discussing the enrollment types with an individual. You know, things like cost, if supplemental insurance is a possibility, if there's extra services, of course, making sure that you're looking at the network, looking at referrals, is that going to be something that's big? So these are some really good, you know, original Medicare versus MA Medicare Advantage Part C plan graph to take into account as well too. Now, like I mentioned, eligibility wise, pretty standard across the board. You know, they do have to be enrolled in Medicare Part A and B. And again, as I've been mentioning, is they do have to live in the plan service area, because even though you have a plan that's from one provider, it can be entirely different just going to a different county or a different zip code. They do have to be a U.S. citizen, not currently be incarcerated, and generally don't have ESRD or end-stage renal disease. There are some exceptions on that, but if you want to know some further information on those exceptions, definitely feel free to reach out to me. And then, of course, to join, they want to make sure they provide their information, follow the plan's rules, and then, unfortunately, they can only belong to one Medicare Advantage plan at a time. But, you know, generally, these Medicare Advantage plans are pretty all-encompassing, so it's generally going to be a very good option for them to choose versus original Medicare. And again, really all based on need. You do that really deep and needs analysis up front, get to know the enrollee and or the participant at the start of things, and you'll be able to match them with the most appropriate plan. Now, last part of our sales technique today is we're going to cover Part D real briefly here. In Part D, as you would probably imagine, Part D for drug costs. So Part D is optional prescription coverage that's sold again by private companies, just like Medicare Advantage, but again, approved and maintained by CMS and Medicare. Just like the Advantage plans, they do have to live in the service area. Again, it is optional. And then you can really kind of get Part D in 2 different ways. One, you can choose original Medicare and add on a Part D plan, Or, as we just got done looking at, they can choose a Medicare Advantage plan that's going to offer their drug coverage. So a lot of the times, you know, the Part D, or as far as the drug coverage are concerned, it's a really big point that is discussed a lot, especially within this demographic, you know, because they do tend to possibly have a lot more prescriptions than, let's say, maybe a younger individual does. Whether that is the case or not, you know, those needs analysis are really going to identify that from the get-go, and that'll really kind of unfold as you're looking at everything of their needs to find out if original Medicare with a D plan or Advantage is going to be best for them. Now, within the Part D, there is a monthly premium. There are deductibles, co-pays, and co-insurance, just like in a Medicare Advantage plan. But, you know, as far as the drug plan is concerned, the beneficiary's income, if it's below the poverty line, their premiums might actually be zero on this. So that's something to take into consideration when you go through this. And just like in Part B, where there's the premiums on that based upon their income, I'm going to show you a real quick graph here. Very similarly, you know, 85,000 or less for individuals, or up to 170,000 if it's joint. There's generally going to be a zero or no cost depending upon the plan's premium. Then you have a couple different levels above this. Something to note on this is that there are a couple additional tiers above and beyond what Part B stops at. Part B stops around the 160 to 170 range and then caps it at that, so that anybody over that amount is going to pay X amount of dollars. This one does have a couple additional steps for 160 to 500,000 and then 500,000 and up based on their individual or their joint tax returns. So just kind of keep that in mind as far as those pricings are concerned for the 2019 year. Now, the other thing that they want to really kind of look at here is to make sure if they are going to get a Part D coverage, or whether it be an Advantage plan, they want to make sure that if their drugs that they need are going to be very critical to them, that they want to make sure that they're included in the plan's formulary. Basically, long story short, with formulary, it's a set of tiers that cover those drug coverages. So the lower that you are on the tier, say tier 1, for example, it's going to be a lower cost. It's either going to be zero or a very, very low to minimum copay that they're going to be required to pay when they get to the pharmacy. And then all the way up to the higher end tiers in tier 5, where they're going to be, of course, a higher copay. Now, with that said, as far as the pharmacies are concerned, just like the Advantage plans are concerned, these do have plans. They have a network of pharmacies, things like Rite Aid, Walgreens, CVS. There's going to be a network that they can choose from, so it's always going to be something that they want to look at before making that decision. And then a lot of the times, even with, for example, mail order, they actually can get the drugs a little bit cheaper, and the costs can be reduced if they do choose to do mail order. This is actually becoming more and more popular as the years roll on, because they can get up to 90-day, sometimes even 120-day supply. And then instead of paying multiple different copays each month that they go to refill it, they're going to pay one copay, and it's going to end up costing them a little bit less in the end. Now, just like other plans, as far as like Part B, there is a penalty if somebody does enroll late. So, for example, if an enrollee doesn't join Medicare Part D when they're first eligible, so that's either one of two ways, obviously getting original Medicare and combining it with Part D, or getting an Advantage plan with prescription drug coverage. If they don't have any creditable coverage for any period of 63 days or more after they enroll, that's when they would incur that penalty. The way that the penalty does is it's broken down as it's equal to 1% of whatever the national average for the Part D premiums are for the year. So for example, two examples down here in 2018, the national average was 3502. Coming up for 2019, which, you know, it's not obviously the 2019 costs, but it's the prior year, those costs are going to be 3319. So there is a little bit of a drop, which CMS is actually has committed to lowering all the prices as far as things like copays by the year 2020 anyhow. So it's nice to see a couple dollar drop in the national benchmark premium this year as well too. So what you do is you take that amount, multiplying it by 1% of that premium, and then you take that number of full amount of months that they are not enrolled or didn't have creditable coverage, rounded to the nearest 10 cents, and then that will deduct, that will actually determine their premium. And then just like the Part B, as far as the late enrollment, if they do incur a penalty, that penalty is going to actually be added on to their monthly Part D premium for as long as the enrollee has Part D. So let's take a look at a real quick example here. So let's say, for example, that Ms. Martinez is eligible for Medicare, and her IEP ended May 31st of 2015. She didn't have any coverage up through all the way as far as December 7th of 2017. Now the dates on here are a little bit wrong in this aspect, but in this one, it was actually supposed to be at the end of 2017 there as far as that second date, not May 31st. So keep that in mind here, that this little coverage area as far as the May 31st area is wrong on that. So we will get that corrected as well too. But as far as the way that the math breaks down, really simply, to make it really easy, is you take that penalty amount, which is the 31%. So basically what it came out to be is the amount of months that she wasn't actually enrolled ended up being 31 months. So you take those 31 months, multiply it by 1%, which is 31%, and then you multiply that by 33.9, which is the base premium for the amount of 2019's year, comes to 1029. Round that up to the nearest 10 cents, and you're looking at $10.30 for her enrollment penalty. Pretty simple when it's broken out that way, right? So if you take a look at the qualifying for extra help, though, something to actually take into account for this is that if an individual does qualify for extra help, it is very likely that they're not going to pay that late enrollment penalty. So if their income qualifies them, or if they're, for example, the low income subsidy, if that actually does qualify them, they can actually avoid that. So the top 3 steps here to avoid the penalty: 1, make sure they join a Medicare drug plan when they're very first eligible. Again, that means either enrolling in Part D with their original Medicare or enrolling in a Medicare Advantage plan. And then, as I mentioned just previously here, they don't want to go over 63 days without creditable coverage. Now, to make sure though that when they do sign up, if they did have any drug coverage during that time period prior to that, if they had any, make sure to tell the plan about that, because that could qualify for them and allow them to skip that penalty. The last thing we're going to really talk about here real quickly is the donut hole. We're going to make this really quick and really simple here. A lot of individuals have come up to me and they're really just a little bit confused with the way the donut hole works. If you think of the donut hole as basically this: the donut hole is a period of time that the insurance companies basically steps back after they've paid X amount of dollars and says, you know, during this gap until you reach this next step, we're going to not pay as much and you're going to be responsible for more of the costs. So the way that it actually breaks down, and again, something to note here is that not everyone will actually enter that gap. There are Advantage plans out there, or there are plans out there that actually will have coverage during that gap. So if that's something that the enrollee is concerned about, definitely make sure that you're looking at plans that possibly do cover during that gap. So the way that it works in 2018, as far as the year's amounts for this year is concerned, is that once the plan amount is spending $37.50 in 2018, that's when they would jump into the donut hole. Now, I actually did find an amazing new graph here for the brand new year of 2019. It actually took a lot of searching, but I did find one for this year. So I appreciate the help from some of the AHCP reps to note, you know, I did want to make sure that the last time I covered it, that it was clear that we were looking at 2018 figures, but I do have this amazing, wonderful, helpful guide here that looks at our 2019 figures. So again, as I mentioned earlier, CMS is making it a critical portion of their step down process that by the year 2020, that there's going to be a lowering of the amount of the percentages that they're going to be paying. So for this year, the way that the donut hole works is that once an individual reaches the threshold of the 3820, that the amount that the premium plan is going to be paying versus their initial coverage limit of 1266, that's when that donut hole is going to go into effect. So what happens when the donut hole goes into effect is that the enrollee is going to pay 37% of the generic cost of their drugs and then 25% of the brand name cost. As far as brand names are concerned, though, there is also an increase in the discount that the manufacturer gives, and that's going to be at 70%. And then as far as the portion of the generic drugs, 63% for generic and 5% for brand names in that coverage gap as well too. So really the donut hole isn't really anything to be scared of. It's just really kind of thinking about it in a step in the fact that, you know, once they reach that 3820 that the plan paid, or the 1266.25 on the initial coverage portion, that's when they're going to enter that donut hole period, and then those percentages of the drug costs are going to kick in. After they then reach the max annual out-of-pocket threshold, which is currently now for the year 2019 at $5,100, that's when they go into the next step for their catastrophic coverage as far as the Part D is concerned. And then they would be paying the percentages that are listed up there. As I mentioned before here, a couple things real quick before we wrap up is extra help. They do automatically qualify for extra help if they have full Medicaid coverage, or if they get help from their state Medicaid program paying their Part D premiums. So they definitely want to look at that as an opportunity to get some extra help covering and or paying for partial or all of the cost of their Part D. Again, or if they are on SSI or supplemental Social Security income, they would qualify as well too. Now, even something to remember though is that even if they do automatically qualify this year, let's say if their income meets it, their Medicaid coverage, or they're getting help, it's very likely that they might not qualify for extra help the next year. So those changes in the income, definitely keep note of those. So if you have people that are going to be doing their renewals and those renewals from year to year, make sure that you're going over those income every year. So in a nutshell, that's Part C and D. We talked about our Medicare Advantage plans and we talked about our prescription drug plans. If anybody has any additional questions about this, some really good resources. And again, I always say I live and die on the Medicare.gov and the CMS.gov sites. They are my best friend during AEP and leading up to it, of course. But you can always learn more on Medicare.gov, or you can even refer and direct your participants and enrollees there as well too if they'd like to learn more. There's some really good helpful videos on there. It explains parts A, B, C, and D in a little bit more depth than what my weeklies go into. They really kind of focus on some deeper numbers as well too. And again, if anybody has questions on some of those numbers, definitely don't hesitate to reach out, shoot me an email, a chat, or questions, and we can certainly touch base on those. And likewise, if you have any questions for the team, for the training team in general, you can always reach out to us at the training@ahcpsales.com or reach out to agency services, the amazing team upstairs from me, and they'd be glad to help you out as well too. So keep that in mind as we wrap up for the day. Again, making sure that you are selling the problem that you're solving and not the product. And I really hope that everybody has a wonderful week. It is a bright, sunny day today. I am highly motivated for the week. It's going to be a great week, everybody. So go out there and get it and hit it hard. And I will talk with you in exactly 7 days. Take care, everybody. I'll talk to you soon. Bye-bye.